Hey guys, wanted to put together a video on the recent weakness that we've seen in the tech market, if this is a potential top in the tech market, as well as how these bond yields are causing the stock market to become stagnant, and a few things that I think we will need to see on the market to find a better direction and trend, and until then to quit from this sideways consolidation action. Enjoy! So getting started, for those of you who have been watching the market recently, it has been a very, very abnormal time here that we have been seeing on the market recently. We have been seeing a very weak NASDAQ market index. Typically, the NASDAQ is going to contain more tech stocks versus those value stocks that the S&P 500 and the /YM Dow Jones would actually have. And that's something to note. We're so used to seeing the tech being a lot stronger than all these value stocks like energies and financials. However, that's coming to a halt here, and it's something for you guys to note for those of you that have been watching the market recently. Something to consider if we do zoom out here on the monthly chart, this is a potential caution sign here for those of you watching the market. For the first time, this is a 5-year chart here. Again, 5 years ago, we're starting at 41.65. We're in this trend here. Even if we get a breakdown, we get that trend. For the first time in 10 years, we are seeing 3 months of pure consolidation here. Not only do we get 1 month here, we get this month here, then we also go here, and then here into March, going to be the 3rd month here. This, again, is the first time in 10 years that we have been seeing this. And we're really not seeing any trend at all here on the NASDAQ. Now, why is that so difficult if you are going to be trading? First off, if you are going to be swing trading puts, this is or swing trading options. This is incredibly difficult, as not only do calls lose value, but also puts lose value as well, because you do not get any trend, you don't get any range movement. It's just going to be up one day, down the next, up one day, without any clear trend for you to play along with. So this makes it very, very difficult for those of you holding options overnight, as the call premium will lose value overnight to theta, as well as the put value will lose, premium will lose value, because we do not have any trend or direction. Again, there's really 2 scenarios for this. We're setting up a base for that next leg higher here up to 14,000, or B, this is the top here. We're exhausting all the rest of these buys that we are here at this 1,300 level here. And then we can expect to see a retest down here at this 10,470 region. Now, we need a lot more confirmation for that, but this is the first time, and again, something to be cautious of, first time we have seen 3 months of sideways consolidation here on the NASDAQ index in over 10 years. So what is happening? Essentially, we're seeing all those big growth stocks, like all the tech stocks like Tesla, Amazon, Apple, all these that we're used to seeing go up are now losing their steam, they're losing their trend, and they're trading sideways. Now, what else is going on? People are getting out of these growth stocks, and then they're going into value stocks such as the banks, the financials, whatever it might be, as they deem them being a more safe place. So again, we're seeing a lot of money being withdrawn from these high growth stocks and these tech stocks and flowing into those more safe value stocks here, as you can see by /YM, the Dow Jones futures here, pushing to all-time highs here on this monthly candle, showing you just how much flow is coming into this versus going to the NASDAQ. We cannot gain any traction here on the NASDAQ. So for those watching the tech stocks, very, very cautious levels right here, right now, as this is going to be the most weakness we have seen on the tech sector in almost 10 years here. So again, 2 scenarios. Either we're forming a base for another run here, or we are exhausting the rest of those cells, and we are going to push down, with that strongest support being down here at 10,470. Now we need another monthly candle for this confirmation, but something to consider again is this consolidation, which we have not seen in a long time. For those of you who have been following the market for the past 8-9 years, you will notice that typically the tech stocks will be carrying and leading the strength on the way, and this has changed. Now we're seeing financials, we're seeing the energy sector, we're seeing the transportation sector come back with a lot more strength than we have seen on those typical leaders like Microsoft, Apple, Netflix, whatever it might be. Those are going to be lagging behind now because of this weakness within the tech sector. So those of you who are in tech, keep this in mind. It's something to consider. I'm personally not liking this setup here until we get more direction. We're again just chopping sideways and eating premiums here on both sides, whether you're swing trading calls, whether you're swing trading puts. Also, third thing, for those of you who have been watching bond yields have been increasing lately. And now you may not think that affects the market, but it does. Why does it affect the market? Because when bond yields increase, investors will pile into that as a safe haven. With those increased yields and rates, they get a better return on their money and thus giving them more incentive to pull out of the stock market and put it into a safe haven such as a bond, 10-year treasury, whatever it might be. So that's part of the reason why, not the main reason why we are seeing this. But if you can look at those treasury yields, typically what you will see is when those yields do increase on especially the 10-year treasury, you will see more people flocking into the bond market as you will get a better return. And we are bouncing from historic lows here on the bond market, which obviously when you're at historic lows, not many people want to park their money into a safe asset that is producing the lowest yields on record. So that is something to consider. Now we are getting a bounce in those treasury yields. So you can consider that investors are looking back into the bond yields to get into, as the return will be better than before. Now, the biggest thing when you do get sideways consolidation on a market like this, you have to be careful. You don't have to trade all the time. You can realize that sometimes cash is going to be your best position. If you have something that has no trend and we're trading sideways, eating premiums on both sides here, what's the point in trying to rush a play? There is no point unless you do have a defined trend and a setup. And currently we do not have that on the tech sector in and of itself. We are seeing some trend here on the S&P 500 index and also the Dow Jones here. But the tech sector, particularly the NASDAQ here, going to be very weak leading into this consolidation phase here. So again, don't just trade because you have to feel like you have to trade. Sometimes cash is going to be your best position, especially when you face 3 months of heavy consolidation in a typical leader market. Last thing is the market needs to find a trend. We are not trending here. We have no trend at all. So this needs to find a trend here in the coming month to see where we are heading. I've never seen, again, in over 10 years, this 3-month consolidation phase that we have here on the NASDAQ. So much weakness in this tech sector here versus other sectors that we are flowing into, again, into the value. So again, I want to see another monthly close here, but this 3-month consolidation not looking good for the bulls here, as you are exhausting a lot of these buys here and failing and rejecting here last month at that 13,900 region here. We can retest the supports below here at 12,010, and again, the biggest one down here at this 10,942 region, and then below at this 10,471 support level. So again, nothing alarming by any means, but something to note as this is the first time this has happened, so it can lead to new outcomes here on the NASDAQ industry and something to consider, as we're typically used to seeing the tech sector leading the way, and that has not been the case lately. If you guys enjoyed this video, if you could give it a thumbs up and subscribe, it would be greatly appreciated. Again, if you are interested in learning with our private team, feel free to check out simplified-investing.com today. Thank you.